What's up, my fellow Harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things Harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into the fascinating world of Harmonic technical analysis. We're going to break down some key patterns that could indicate potential major moves in the market. Next week is also packed with crucial economic data that could shake things up, so we're going to be paying close attention for what the data suggests next week. We're going to be starting to look at PMI, which is a Purchasing Managers Index. This is a vital indicator that shows the health of the manufacturing and service sectors. It gives us insights into whether the economy is expanding or contracting. Next week, we also have CPI, better known as the Consumer Price Index. This is a measure of inflation and one of the most closely watched economic indicators. It tells us how prices are changing for goods and services, which can impact everything from consumer spending all the way up to the federal policy. This week, we're also going to be looking at retail sales. This data reveals how much consumers are spending at stores and online. It's a great indicator of consumer confidence and overall economic activity. Finally, we're also going to be looking at buildings permits. This is a leading indicator of future construction activity. This can give us an idea of where the housing market is headed, which is crucial for understanding broader economic trends. Lastly, I did forget to mention we have continuation into earnings, so it's going to be very important to see how these companies report. So if you like this type of content, don't forget to hit that like button. Ring that notification bell so you never miss a future video. So having said that, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your conclusions. Having said that, let's jump right into those charts. So jumping right into SPY here, currently has a bearish crab pattern on the daily. So what can we expect here for SPY? I did want to mention that the crab pattern did extend to the 3618 where it hit hop, and then it finally came for a type 1 reaction where it did lose below target 2 there at 513.06. It went down to 510.27. So what can we expect here? Looks like it wants to come for a type 2 return to potentially hop. We are starting to see that the volume has been decreasing in the last few days here. This last basically the whole week, right? It started to come back down. So what can we expect here harmonically? Bring up my drawings, and there's a lot of lines to look at here, but bear with me. So right now what I'm looking at to see if there's continuation to the upside here for SPY would be a retest of my line there at 538.33, kind of roughly where the 50 EMA is at, as well as a 21 EMA. If you are able to break above this, the next level I'd be looking at to reclaim is XA there at 533.61, where I do have another target at 546.95, where if you break above it, then we will be looking at potentially to fill the gap there at 562 and maybe retest all-time highs again. If you fail here around 538.33, maybe close the gap, you could get rejected back down to test target 1 at 542. Then I have 520, 515, and then maybe you come all the way down to retest the 200 EMA SMA and fill that gap where there is a gap there around 506 and change. Right now, harmonically off the HSI, you did cross to the upside at that midline, so it's going to be very important to see if SPY has continuation to the upside. If we take a Fibonacci retracement from the all-time highs to the lows here, SPY is currently above the 382 with an attempt at the 50% retracement of this whole swing high to swing low wave. So that's at 537.78. It would kind of fill the gap, and it's going to be very important to see what it does there. If it goes above the 618 there around 544 and change, then you're potentially looking for a reversal back to start looking to make higher highs and higher lows, which ultimately breaks the trend, breaks the bearish trend and starts looking for a bullish move to the upside where it starts to look good again for the bulls. So there's that scenario there at the 618. In my opinion, you break the trend and you start looking more bullish. You can also take a Fibonacci retracement from this area right here because you did push back up. So most recent swing high there to swing low, you're currently above the 50% retracement with an attempt right where the gap fill is at 618 at 537.68. If you flip and stay above that, in my opinion, you break this most current swing high to swing low. But ultimately what I would like to see for strength is to actually retrace from the swing, from the retracement from the swing all-time high to the most recent swing low, to have more stronger confidence that this potential type 2 return to hop is coming. So we have to see that volume pick up, because right now, in my opinion, the volume has come down on to the downside this past week. So if we go over to the weekly here, guys, remove some of these drawings. I know there's a deep crab here. You can see that it did fall below 21 EMA and is ultimately finding support and held above that target there. So I want to quickly jump over here to the ABCD pattern that I think is important. I know this is a little bit of a harder pattern to play, but I like that it's closing above ABCD here at 531.35. So if it manages to continue to the upside, then I have 555 next. You know, you had rejection here twice. past 2 weeks, and we came back down. So if it managed to hold above 531.35, then I would like to see a retest of 555 and then ultimately test all-time highs. The volume on the weekly obviously came in, and obviously had to do with the volume that it got on Monday, right, when we came down pretty significantly. So we're going to see if there is more continuation to the upside here, and you want volume to definitely continue if there is a sign that the bulls are starting to push this back up. If not, then we'll be looking at deeper retracements here on the weekly, maybe a retest of the 50 SMA there, EMA. 50 EMA would be at 500, and 50 SMA would be at 490-ish and change. As you can tell, the last time it did lose at 21, it did come back down to test the 50 EMA SMA, and that's where it found support. So the HSI on the weekly, though, one thing that's interesting is that it's in oversold conditions where you could potentially start looking for a reversal HSI arrow similar to what you did back here, and see if volume starts to pick up, because if it repeats something like that, it's going to be pretty insane. We do have seasonality that could be a potential thing with the election coming up. If the seasonality is a thing, doesn't always have to play out, but seasonality towards the end of the year tends to push the markets to the upside. But like I said, there's a lot of things going on, so it's going to be very important to see how the market reacts to CPI, continuation with earnings, and everything that's going around right now, right? There's fears of global recession, there's the Middle East, and all this other good stuff. So, or bad stuff, I should say, that is potentially here have fears back in the market, as the VIX has been elevated. It did cool down this week, but there's still fears out there. So we're definitely going to keep a close eye on SPY. Jumping over to the triple Qs here. So no current harmonic on the daily. We do have one on the weekly, but we're going to be looking at the daily here first. So one thing I'm looking at here for the triple Qs, if there is upside here, you have to break above 450, 72 here. So if you break above that, the next level I'd be looking at would be the 21 EMA there around 460 and change, and then maybe you have a chance to fill the gap there around 470, where the 50 SMA is at. Looking at the triple Qs versus the SPY here, the triple Qs is kind of in a more recent swing high to swing low. You are retracing at the 50%, similar to what SPY is doing, right? The 618, you would flip a little bit more bullish at 455.73, and you can maybe start seeing with attempts to create higher highs and higher lows. But if you compare SPY to the triple Qs here, from its all-time highs to its lows here that we just had this week, you can see that it's barely approaching the 382, where SPY, I believe, is already at the 50% retracement of the full swing high to swing low, from all-time high to swing low. So right now the triple Qs does need a little bit more room to the upside for this to actually start flipping bullish again. I still think we are a bit bearish here for the triple Qs as volume starting to decrease. You did cross just like the SPY here on the HSI above that midline, so we're going to see if volume starts to pick up. So like I said, you'll be looking at where the 2150 EMA is at. That's around 463. Then the 618 would be 472, which would fill the gap. And then if volume continues to the upside and momentum goes to the upside, then I'd be looking at the second gap fill here, which is around 492 and change. And then you have the all-time high attempt there around 504. If we go over here to the weekly, you can see we had 3 candles to the downside. It did find support at the 50 SMA here, where it has come down to the 50 EMA, never tested the 50 SMA. It got really close to the 50 SMA, but has volume to the upside here. Similar to SPY, the HSI could flip green here, and you could generate an HSI arrow and maybe see a reversal. That is the oscillator that would signal that a reversal is incoming, and you'd be looking at this ABCD pattern to potentially come back all the way up to 498. But before that, you definitely want to reclaim the 21 EMA, which is around 456, get above the 9 EMA at 466, then you might see resistance there around 480, but ultimately to come back and test ABCD at 498.04, and then for hop at 529.73 down the line. So if you also fail the rejection here at 450, the next level I'd be looking back would be see if it comes down to test that 50 SMA around 420, 421, ultimately come back to 408. We'll look over here to the daily time frame here really quick. So if there's resistance here at 450, you'd come back down for a retest of the 200 EMA, 200 SMA, which could be anywhere between 434 to 431. If it fails, and maybe you come back here for a double bottom down to test the lows are at 423, and ultimately if volume picks up to the downside, then the next level I have here for the triple Qs is at 408.71, where there's continuation to the downside to 386, gap fill around 377, and ultimately going to the downside there. This gives some confluence to the 200 SMA where it's at 352 and change, where there is a slight gap to fill there. So you can tell here this was created back in, let's see, over here, small little tiny gap in October 2023. So we'll see if the triple Qs manages to hold above the 200 SMA. Otherwise, I could see if volume picks up to the downside to create a lower low. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones currently has a bearish crab pattern similar to what the SPY has on the daily. So what can we expect here harmonically for the Dow Jones? So one of the things I like that the Dow Jones is doing here is that it reclaimed the 392.04 level, which is above target 2, and you did generate an HSI dot, which was doing a check back of a previous PRZ zone, and now it's creating another HSI arrow, meaning reversal. It looks like it's incoming. Volume did start to increase from Thursday into Friday, so we definitely want to see the Dow Jones pick up on that volume to give us that potential suggestion that it wants to go towards a type 2 return to potentially all the way up to hot, right? So if we are looking at just swing high to swing low here with the Fibonacci retracement, it is currently testing the 382 where it's having some resistance. It did not close above it. So if you're looking at fibs here, you definitely want to retest the 50% retracement, which is at 399.12. If you go above that, then you have the 618. You flip the momentum back bullish, which is around 402.60, and you also fill that gap, and you also get above target 1 at 401.08. If you take the swing high, the most recent swing high here for the Dow Jones, which is roughly right there, you can see that it's closing at 382, so not too far off right now. The Dow Jones, we do want to see continuation. If you're long on the Dow Jones, the volume to start increasing to suggest that we are pushing back up. If you fail here, because you did have resistance there at the 13 EMA, if you fail and not hold above the 50 SMA there, you could come back to test target 2 at 393.19. I do have a line at 392.04. And if you fail that, you could come back to 384 and test maybe the 200 EMA SMA, which is around 380. If we go and look at the weekly here real quick, you can see that it did fall below the 21 EMA on the weekly, and it closed above with some resistance there at the 9 EMA. So we do have an ABCD pattern here. Volume started to look good here on the upside for the Dow Jones. The HSI is approaching that midline. If you find support, you can still come back for a bounce, recheck that 21 EMA maybe, and then start pushing towards that ABCD there at 407.02, and then ultimately on a line test the all-time highs are at 413, and then hop at 422. If we go and look here at the daily here real quick, if you get rejected to the downside here where the HSI arrow is at, and that could be anywhere between its current close price at 395 all the way to the 21 EMA around 397, and get rejected, you could potentially come back for a lower low. That lower low would be around 384, right, just where this indecision candle, doji-ish candle here, long-legged doji, at the low there was at 384.93, giving confluence to the previous harmonic target there at PT1, and felt that you might come here to test a 200 EMA SMA at 381.80. But for right now, it looks good, in my opinion. Here, Dow Jones starting to pick up some volume, so we'll definitely want to see what the Dow Jones does from here. There's also one thing to mention is that you do have right here an M formation in harmonics. That potential is a bullish harmonic forming, so we're going to see if maybe, let's see if the HPC indicator is suggesting that there is a pattern, pending pattern or potential forming here, as it is an information, and it looks like the indicator is not seeing it right now, but ultimately we'll see if it starts to generate something here down the line. So definitely keep a close eye on the Dow Jones. Jumping over to IWM, so the Russell 2000 IWM currently has a bearish C-crab on the daily. So what can we expect here harmonically? After Monday's sell-off here, you can see that it had some buying pressure here. One of the things that normally I'm looking at from volume to price analysis is this candle. The spread of this candle is much wider off of decreasing volume, and I'm trying to see if that is actually a potential bear trap there. So we want to see volume pick up again. It is holding pretty well above the 200 SMA, and it did reclaim above target 2 where it closed on Friday at 206.46. So if this is finally coming back for a type 2 return, you definitely want to see volume to the upside pick up on IWM, because there is a gap to fill there roughly around, the gap gets filled around 214 and change, so that definitely goes above the target 1 there at 213.16. So to the upside, the next level we'll be looking at first would be the entrance of the gap. You have a lot of resistance here with the 59, 13, and 21 EMA. So an attempt to the upside, I would be looking for 211, 213, fill the gap there around 214, and then maybe if you reclaim all of that, you start looking for upside to potentially the type 2 return to XA at 224 and then hop to finish that reaction all the way at 233.44. If you get rejected at the entrance of that gap, you could come back all the way down to 204 as well as 202 here, and then ultimately go down to the 200 SMA for a double gap around 198. And if you fail that, then you'd be looking for some downside below back to the 180s. Right now you did generate that HSI arrow, which is suggesting that reversal is incoming, but we want to see higher volume. And with the data that's going to come out this week, you might have some choppiness up until that data is released. If we go over to the weekly here, you can see that we have a white swan pattern. So this white swan pattern, it is a bearish pattern. You could tell at the rejection of point D, it came all the way down, and it did lose PT2 below 205.88, where IWM came down to 196.70, but that held support above the 200 SMA. So it did reclaim PT2, so the next level harmonically within this pattern I'd be looking at would be 214.39, which again gives confluence to that gap fill, right? So we'll see if that is a case where you could get rejected once down again. And if you do get rejected and lose the 200 SMA, then there is a big drop from the white swan, the bearish white swan, all the way to target 3 there at 168.29, where there is also a gap fill in the 170s. Right now the HSI is approaching that midline, so that midline could be, again, if you do come to the downside and test that midline, that could be just around 202 and change, somewhere around where it closed at 206 to all the way to 202, where if it finds support off that midline, then maybe it starts creating higher highs and higher lows. So if I draw really quick, as you could tell here, that this is in a channel, right, creating higher highs and higher lows. So this could also be a rising wedge, I'm not sure just yet, depending on where you draw this from. But right now it is in an upward channel creating higher highs and higher lows. So if you find support here, you'd be looking for the next attempt here at a higher high. And you can see that the white swan does have patterns all the way to the targets all the way to 228 and then OPR at 238. So we'll see if IWM starts to pick up in volume, and we'll see if there's still that thesis out there that there is capital rotation from big tech into the small and mid cap stocks. So definitely keep a close eye on IWM. Jumping over to XLF here, the financial ETF. So what's interesting here, in my opinion, the financial sector is starting to move quite significantly, specifically certain tickers. I'm going to show you an example in a little bit. That's with JPM, but what can we expect here for the ETF? Currently has this bearish crap pattern on the daily. It did come back all the way to do a type 1 reaction below target 2 and is ultimately climbing back up towards a potential type 2 return to an attempt at hop at 44.72. So what can we expect here to the upside for XLF? The next level I'd be looking at here would be to reclaim target 1 at 42.68, test OPR there where there is a slight gap to fill, reclaim OPR at 42.95, XA at 43.80, and then hop, which would be a new all-time high. If you take here the swing high, similar to this area here, right, that is currently finding right now from a swing high to swing low a 50% retracement back up. So it's giving back basically all the gains it lost, 50% of what it lost, and is reclaiming it at 42.39. If you're able to reclaim the 618, which is around 42.80, then you flip this again bullish for the financial sector. Now really quick here, I'm just going to show you guys JPM and what it's been doing. JPM here is on volume decreasing, but it has ultimately almost reclaimed much of that downside action here that it got, and it is approaching that 618 at 207.73. So we flip that back bullish if you're able to close above it. The next level you'd be looking at would be 209.09, and then you could see maybe JPM touch the all-time highs again. So what's interesting here is that right now some of the banking sectors, so like Goldman Sachs, also has been pushing to the upside, as you can tell. Goldman Sachs is another bank that is pushing up from its all-time high to swing low here. It already reclaimed the 618 at 46.65. So technically here, see if it finds support here, you could start creating higher highs and higher lows. And if it does that, then you could see maybe this attempt to test the all-time highs there. So if you jump over to XLF here, what happens if you get rejected here around the 21 EMA? or ultimately you have right now retesting the HSI towards that midline, which could be maybe target 1. If you do fail target 1 there, you could come back to test target 2. I have a line there at 4170 and maybe double bottom. Like some of these tickers are starting to look like double bottoms for an attempt, but right now we did slow down here on the ETF here with volume decreasing on Friday. So it's going to be very important to see, because if it does come down below that, then you have the 200 EMA and 200 SMA around 39.78 and 39.45. Below that, then you have the dragon pattern, which is 38.72, PT1 at 36.95. If we go over to the weekly, you did reclaim the 21 EMA as it fell below it, and ultimately now closing above the 9 EMA again. So right now on the weekly, you do have a bear shark pattern where it kind of came down almost to test terminal there at 40.47, and right now finding some support above the 9 EMA. So the next level here, you'll be looking at the 1.13 of the shark pattern, which is at 42.92, and then you test hop there at 44.59. Right now the HSI on the weekly is approaching that midline, so like I said, you could reach that 42.92, maybe fill that gap, and then see if it bounces off the midline to see higher highs, or it fails and you come back down to test the terminal bar. So definitely, in my opinion, start looking at the banking sector, especially if the market has started to price in these interest rate cuts. We could see maybe some upside on the banks short term, so definitely keep a close eye out on XLF. Jumping over to XLE here, the energy sector currently has this bearish shark pattern on the daily, where you completed the type 1 reaction way below target 2. You had that M formation there, which is a double top, and you broke that neckline. So an M formation actually can extend all the way up to here. An M formation in harmonic patterns is a potential reversal pattern that could be generated as bullish, and right now it is looking like it wants to retrace potentially for a type 2 return to hop there at 97.28. Volume starting to increase from Thursday into Friday. It did cross the HSI midline there, so if it starts continue to the upside, the next level I'd be looking at would be to reclaim target 1 at 91.06. Then maybe you could see the terminal bar there at 94.51, where it did find some resistance where it created that double top, and then ultimately look for the target to the upside at the 1.13 of the shark pattern at 96.20, and then hop at 97.28. Right now you did close above the 200 EMA on increase in volume, so if it is going to find support, you definitely want to see if it does do a retest to stay above it and see it continue to the upside. If it fails to lose a 200 EMA there, then the next level would be looking at would be T2, come back all the way down here where it did test previous target there at T1 at 85.60. Below that, then I do have a drop there for XLE here at 82.51. If we go over to the weekly here really quick, you can see that it reclaimed the 50 SMA. It's still in an overall downtrend, so the volume did pick up slightly, still decreasing, and it's still below the HSI midline. So you could just come back up towards that 90, almost 91 level if you get rejected there, and then you could start looking maybe for a lower low. So definitely keep a close eye out on XLE. Jumping over to Apple here, so Apple, no current harmonic pattern on the daily. As you can see that it is finding some nice volume here. It started to decrease slightly, but if you ignore the anomaly that happened on Monday, because there was high volume selling and buying because of how the market reacted over the weekend, you can see that the volume minus that anomaly is actually, pretty average volume prior to the sell-off. So what can we expect here for Apple? Next level I'd be looking at to see if it could reclaim the 21 EMA there, just slightly where it closed, so around 217 and change. See if it closes above, reclaim the 21 EMA, and see if it could start looking to push to the upside again. I bring up my drawings. You do have a gap fill all the way up to around 231 and change, and then the retest all-time highs at 237.96. So really quick here, I want to share where we are just with the Fibonacci retracement from the all-time high to the swing low there. You can see where it is currently testing the 50% retracement at 216.52, and that's slightly where the gap is at. So if you manage to hold above that and look for, would be looking to the upside for an attempt to 221.41, roughly where my line there is at 221.59, where the 618 is from most recent all-time high to swing low. You flip that momentum bullish if you're able to reclaim the 618, and you'd be looking to create potentially a bullish trend with higher highs and higher lows. Obviously you have 228 from that fib, the 886 at 232, which would fill the gap, and then the 100% retracement. If you take the swing, the most recent swing high to swing low, you can see that it is already above the 618 with just trying to fill that gap there where it's finding some resistance at the 21 EMA. So the 786 would be at 219 and the 886 would be at the $222.20. So right now Apple is starting to look pretty decent. The only thing is that volume started to decrease. You could start chopping up to see what happens until CPI. But if you get rejected at the 21 EMA, maybe you do fill the gap. You did cross the midline, so we can see if there is resistance, you might be creating a potential inverse cup and handle here, where you'd be looking back down to the downside if you get rejected anywhere between the gap fill and 221 to create a lower low. So below to the downside, I'd be looking at 198, OB at 194.56, just slightly above the 200 EMA, and then you had a 200 SMA all the way at 190, roughly where the terminal bar is at from the previous harmonic pattern, which is already invalidated, but it does not mean you can't use this as levels of support and resistance. If we go over to the weekly chart, there is a dragon pattern where you did go above OPR as well, and you did come to potentially almost that BC target at the 886 from the pattern 194.52, where you did find support slightly above it, reclaim the 9, and you also reclaimed the the 21 and reclaim the 9. So to the upside here, you just are looking again at those targets to the upside. HSI did cross the midline. It's still looking like it wants to come back down to test the oversold conditions, but you could see maybe on Monday open up as that HSI could start looking to curl back up. So no current harmonic here on the weekly as well. This pattern wasn't validated, but you can still use it, like I said, level to support. So to the upside, you're just looking again at some of these lines here at 220, the gap fill around 231, and then an all-time high attempt at 242.22. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft currently has an ABCD pattern, a bearish ABCD pattern on the daily, where it completed the type 1 reaction and actually lost target 2 all the way down to 385.58, but ultimately did find support above target 2 at 399.45, and it did close above the 200 SMA slightly at 406.02. So what can we expect here harmonically to the upside? The next level I'd be looking at here for Microsoft would be to reclaim target 1 at 419.80. Right now there might be resistance on the way up there at 413. Target 1 is very close to the 21 EMA. The HSI did cross that midline here, so we're going to see if it's actually bullish here for Microsoft. Again, I do think maybe a reversal come back to test target 1 is the next case scenario here. The volume starting to kind of match at least some volume picking up here potentially. We're still seeing as it is matching the previous candle closes here from Tuesday and Wednesday. So if Microsoft is going to give us an indication that it wants to reverse, we want to see that volume pick up. If we take the fib retracement from the all-time highs to the lows here, the swing lows, most recent swing lows, you can see that is just barely closing above the 0.236 here, so that's at 405.22. So in order for this to get very bullish again, obviously you want to reclaim the 50% retracement of this whole wave, because that would mean you give the bears gave up 50% of that moved, and the bulls reclaiming that move there to 427.03. If the bulls can reclaim the 618 at 436, then it starts to look like a bullish trend is back in play. But if you find resistance, like I said, you could be looking towards targets to the downside at 399 and then all the way down to 386.73. If you take the fib retracement from just the most recent swing highs here and swing lows, you can still see that it is still slightly finding resistance at that 50% retracement, which is at 408 and closing above the 382. So the volume in short term here compared to what it's happened right now, it's still kind of iffy here, but we definitely want to see if you're going long for the bulls to step up here with volume to the upside. If not, then you could get rejected again and come back to 399.45 and maybe create a double bottom at 386.73. And if we go over to the weekly, there is some support at the 50 EMA and SMA. So the next level on the weekly would be to reclaim the 21 EMA at 421 and then the 9 EMA at 426. If you fail the 50 SMA and EMA, then I'll be looking at 368, and then you have targets to the downside all the way to target 1 to 290. As you could tell, the last time it tested the 50 SMA and EMA was roughly here back in March, where it did find support and it started to make higher highs. So we'll see if Microsoft is able to repeat that. If not, then we do have a big drop incoming, in my opinion, for Microsoft. We'll definitely keep a close eye. Jumping over to Amazon here. So Amazon, one of the first blue chips here to have an actual bullish pattern on the daily. This is a bullish shark pattern for Amazon. So at the completion of the pattern at point C here, you're started to reverse and holding above the terminal bar, obviously. So the next level I'd be looking at here would reclaim the 200 EMA SMA roughly around 169, 170, where you did wick up there in that area and did find some resistance. So you want to see volume pick up again on Amazon. It started to decrease here since Monday. Obviously Monday was huge volume, but we want to see that at least some attempt here for the bulls, as the bears were only to bring it down slightly on Wednesday, and the bulls did manage to bring in the volume on Thursday, but Friday it did decrease. So there is a huge gap to fill to the upside here from the earnings play that it had. So that gap gets filled around 181 and change. If you're able to close above the 200 EMA SMA, the next level I'd be looking at would be the 21 EMA, roughly where target 1 is at. That's around 176 and change. If you're able to do that, then you complete the type 1 reaction, where you could potentially get rejected, come back down to the 200 EMA SMA around 169, 170, fail that, and then you come back all the way to the terminal bar at 150, 160, and then for a type 2 return to hop at 142.19. So right now the HSI is approaching that midline, still hasn't crossed it. In my opinion, if you cross it, that's going to be around where the 200 EMA and SMA are at. So what's interesting here is that the HSI it is at the 200 EMA and SMA, where the 9 EMA is also at. So there's going to be some resistance there, but if you can get volume to the upside, you can quickly go back up to target 1 there, maybe find support, fill the gap towards 181, and then you'd be looking back to test 188. There's another gap to fill to the upside there at 192, and then target 2 at 195.55. So on the weekly, if we jump here really quick, we have an ABCD pattern where you did manage to close above the 50 EMA. You did lose it below the 50 EMA and SMA. The HSI right now is at oversold conditions, which could mean a reversal is incoming within this pattern. And if there is an HSI arrow to the upside, you'd be looking at a retracement back up to, at least in this pattern, at the 886, which is around 179.95. And then you have the terminal bar of this pattern around 189 and hop at 203.04, which would create a new all-time high for Amazon. So right now there is a scenario here where you could finish the type 1 reaction, just fail that, and then come back down. So it's going to be very important to see where Amazon goes here, because these candles here the past kind of 4 days are a little bit indecision candles here with the long-legged dojis, right, long-legged wicks. We'll see if there is upside here. Kind of resistance, very important level to watch in my opinion would be where the 9 and the 200 moving averages are all aligned, right, also where the HSI is at that midline. So very key level in my opinion for Amazon this week, so definitely keep a close eye on Amazon. Jumping over to Tesla here, so Tesla currently has a crab pattern on the daily here where you completed the type 1 reaction and it did find support above target 2. We're currently closed at exactly $200 to the dot. So what can we expect here for Tesla harmonically? The volume is kind of on average, so we're going to see if it actually can claim the 200 EMA and SMA. That's roughly around 205 and change. You need to break above the 200 EMA and SMA, because ultimately when the ticker is below that, that is kind of bearish. So if you can reclaim it, you'll be looking at some resistance here between the 200 SMA around 203 all the way up to 21 EMA at 215. If we're able to break above the 21 EMA, then I'd be looking at target 1 at 220 for the type 2 return all the way up to hop there. So you have some targets there. You also do have some gaps to fill there all the way to 245 and change. So if you do the type 2 return, those are the targets you're looking at, 258 all the way up to hop at 275, and then a gap to fill around 288. If you do get rejected here at the 200 EMA and SMA, where it's not able to break above, right, you see these wicks up here towards the 200 SMA, you got rejected there 3 times, and now the volume is kind of starting to consolidate there or even decrease here. So if you do fail The next level to the downside I'd be looking at will be 195.32, target to at 189.30, double bottom there again around 181, and ultimately come back down to 177. So I do have a range that Tesla likes to be in anytime you break above or below 177. It likes to stay between 177 and 223 for a bullish breakout above 223 or a bearish breakdown below 177. If we go back here, you can tell the last time you broke, you had this whole range here, right? Basically all of May to July, just rejection at that 177, rejection until finally it broke out here in June. What happened? You pushed up to 223, and then you went all the way up to 270. And now you're back at it again where you try to stay above that 223 over here, false breakout, and you push down. So you could see the last time you also broke down from 223, you came all the way down to 177, somewhere around there. You pushed up, tried to hold support, but failed, ultimately came back all the way down to the $140 range. So right now, in my opinion, if Tesla does not find support here and start looking to push back up, then we could see a retest of that 177 down the line if things are bearish. If not, then you maybe just consolidate here for an attempt to potentially go back to that 223.79. So in my opinion, very bullish outlook for Tesla if it can break above 223. Bearish outlook if you break below 177. So right now you, in my opinion, just be trading sideways here, consolidating, waiting for the next leg up, and hopefully it starts to invalidate some of these bearish patterns, because this could start looking like an asymmetrical triangle here to the downside, or even a bear flag depending on how many days it likes to trade. It will trade within this range. If we go over to the weekly still has this Garley pattern, as you could tell, came for hop, type 1 reaction completed, and now maybe doing a type 2 return again to hop at 145.61. It's not clear, volume decreased, but on the weekly here you have a bit of resistance where the EMAs are bunching up, so that's anywhere between 210 and where it closed there at 200. So if you're able to reclaim that 210 range, then you'd be looking at T1 at 225, target 2 back to 253, and then maybe that double top around 271. If you fail because the HSI did cross the midline and you get rejected here around the 9 EMA around 210, then you'd be looking for a double bottom test at XA at 183.81. And if you drop below that, then you'd be looking for a double bottom at the hop target again around 145.61. In my opinion here, it's a little bit low volume on the weekly. The HSI coming towards these oversold conditions could be back to just retest XA at 183.81, but it's still ultimately not clear yet. So we definitely want to see what Tesla does this week. Ultimately, I believe Tesla does benefit from the tax cuts, so the interest rate cuts, I should say. So we'll see if things start to look bullish again here for Tesla, because if it does, then you can see major upside back up to some of these levels if you can reclaim above 223. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google, no current harmonic on the daily. Volume did start to increase from Thursday into Friday, so that's something that you want to see, that it is a bullish engulfing on Google. So what can we see to the upside just looking here at the daily? If we take a fair retracement from the all-time highs there to the swing lows, you can see that it's finding resistance at around the 236. So the next level to the upside would be to reclaim the 9 EMA around 164. Yeah, the 13 EMA around 166. The 21 EMA would be at 169, where you're slightly above the 382 here at 168.75. In order for you to flip this bullish again, in my opinion, Google needs to reclaim minimums, the 50% retracement at 173.14, and to get bullish, very bullish again, would be to reclaim and hold support above the 618 around 177.53, where you enter the gap. That gap gets filled around 181 and change. And then you can see moves to the upside again to retest the all-time highs all the way up to 190, 175. I do have a fib ratio there at 193.70. So if you fill the 9 EMA here, the next level you could come back to retest would be a double bottom at the 200 EMA around 157, maybe around 155 where you created that low, and then the 200 SMA is roughly around 153. Right now you did cross HSI midline, above that midline on volume increasing, so there's some signs there that a reversal maybe to retest some of these levels, but there is going to be resistance here where you have these indecision candles here, so it's going to be very important to watch that level as well. If we go over to the weekly here, You have this ABCD pattern as well as this white swan where it did find support above CD and is reclaiming OPR there at 162.91. Off the ABCD pattern, if you can get above the 21 EMA here around 167, reclaim the 9 EMA around 171 and change, 172. You could be looking for that ABCD target at 184.44 and hop at 197.59. Right now, the good thing about Google, at least on the weekly, you did find support above the 50 EMA, where the HSI is also in oversold conditions, where you could generate an green HSI arrow, meaning that reversal isn't coming within this harmonic pattern. So definitely keep a close eye out on Google. Jumping over to Meta here. So Meta, quite interesting chart to say the least. If we look at here, we have the bearish bat pattern alongside the bullish black swan. So at the completion of the bat pattern, which was point D roughly here, you did slightly come back down, but ultimately made a higher high, where that was where the black swan point C was generated. And you finally reverse for the reversal for the bat pattern, where you did complete the type 1 reaction all the way to target 2, and we're looking for after July, I was looking for a type 2 return to hop, but ultimately failed and created a double bottom. So the black swan, the bullish black swan at the completion of point D, you also did similar to what the bat pattern did. You reversed at the pattern, you completed the type 1 reaction, came back down for almost type 2 return to OPR, but found double bottom in conjunction with the bat pattern, and are now looking up here again for potentially a target there at PT3 604.71 down the line. What's interesting here is that you had just a lot of indecision candles here, reversal candles, and ultimately you're now getting volume again on Meta. So the sell-off that happened on Monday, you could tell here, it was right here. It was actually much less than what happened here after earnings. So volume is coming in for Meta, and strong volume at that. If we're looking at just the black swan pattern here, you did reclaim PT2 again, finding resistance from the previous bat pattern here at XA at 518.15. Slight decrease on Friday, but the HSI looks like it wants to go to these overbought conditions. So the next level to the upside I'd be looking up for Meta would be the high there at 527.17, and if you're able to stay above that, then the next level I'd be looking at would be hop there at 547.99, which would be a new all-time high for Meta. What is interesting here about Meta, that it already reclaimed most of the move that it had to the downside, right? So if you take that swing high, basically the all-time high, to the swing low there, look where you're at. That's the second day close above the 618, and it's looking like it's going towards that 786. So Meta is starting to look bullish already. This is the first blue chip, I think, that's kind of retraced most of its most of the wave that it just had to the downside. So the next levels I'd be looking at above hop would be 567. There is a case there for PT3 down the line. That is an extreme case within the black swans pattern. And if we go over to the weekly here real quick, we do have a bearish white swan on the weekly, where you could tell that, you know, it's up to definition, but or how you interpret an engulfing candle, but some people refer an engulfing candle to just cover the body of the candle. In my opinion, like I've said in future videos, the engulfing candle could be even show more strength. If you could also engulf the wicks, it just shows more strength within that engulfing candle. But nonetheless, that was an engulfing candle. If you are looking at by definition the body of the candle with an HSI dot, meaning it did a check back of the PRZ zone from the previous HSI arrow. So within this white swan here, this bearish white swan, you close above PT1, and the next target here would be 542, which again gives confluence on the daily targets, and for OPR at 577.71. So right now, in my opinion, Meta kind of strong here, back up to the upside. So I was wrong where I did say that this might be looking bearish off of the weekly pattern. When you did come back over here, I thought it was, you know, I'd say pay attention to this, because if it loses PT2, then it could be a fast move to the downside. But for Meta's sake, it did find support here and is now looking back to being bullish again. So definitely keep a close eye out on Meta. Jumping over to Netflix here. So Netflix on the daily has that all bat pattern that kind of already had past 30 bar rule, but we can still look at these as a level of support and resistance for these targets. If we take a fib retracement from the previous all-time high to the lows that we got on Monday here, it has retraced up to 382. If you take the fib retracement from the most recent swing high right here, would be retracing already above the 618. So ultimately, what I want to see here for these blue chips especially is where we are in the market is to reclaim the from the all-time highs to the swing lows, because that is the momentum it lost, right? So reclaiming some of that wave, especially at least minimum 50% retracement, would start looking like it wants to reclaim some of these levels again to find support and continue pushing higher. So that level would be, for me, would be the 50% retracement of this wave would be at 642 if it manages to close above it. For me to seal the deal would be at 618, which would be 6520, which you would be looking for high highs, high lows, and ultimately looking to flip the trend bullish again. So I know that there's short-term things you could take swing high to swing low, and it's already above. From this instance right here, swing high to swing low, it's already above the 618, but it's still in a downturn. So you ultimately want to take, when you're doing swing high to swing lows, depending on after it loses a big, the big momentum that it had to the upside, you definitely want to see take the fib retracement from swing high to swing low, in my opinion. Otherwise, you'd just be looking for a small retracement up to some levels and see if you get rejected for a lower low. Volume did pick up, obviously, to the downside, but it's starting to pick up over here, increasing volume. Thursday to Friday, it did decrease. So those are the levels I'd be looking at, right? The harmonic levels I'd say at 651, 665. Obviously, reclaiming those, you'd be way above the 618 from the swing high to swing low. If you go over to the weekly, you did form an HSI arrow to the upside here, where you did find some resistance at PT1 from the bearish white swan on the weekly at 638.81. So if you're able to reclaim that, the next level harmonically here within this time frame here on the white swan would be CD at 69.49, and then OPR, which would create a new all-time high. So Netflix has yet to make an all-time high. It's one of the lagging blue chips here that has yet to make an all-time high. Its previous all-time high was back in November of 2021. Netflix has yet to make a new all-time high still. So generating this HSI arrow means a reversal within this harmonic pattern could mean a potential push for a reversal, maybe back to test the 52-week highs and then make all-time highs. So we'll see if that's the case. If not, if you find the resistance because of the volume is decreased. MACD, by the way, did flip green. Still too early to tell. If you do find resistance at this BC target at 635, then you could go for a potential inverse V back down to T1 at 609.29, and then target 2 at 583. If it fails that, then you have the 200 EMA and 200 SMA between 575 and 568. Below that, then it gets very bearish because you do have a gap to fill all the way down to 499, 498 and change. So definitely keep a close eye on Netflix. Jumping over to NVIDIA here. So NVIDIA here, guys, no current harmonic on the daily to the weekly. We're currently just looking at, support and resistance levels, as well as just the EMAs, the moving averages here. So what can we expect here for NVIDIA? So NVIDIA is starting to look like a potential inverse cup and handle, right? You have the cup would be here, the handle would start to generate now, and if this is an inverse cup and handle, you'd be getting rejected to make even lower lows all the way down to I could say from that inverse cup and handle to even gap fill all the way down to 68. I know that's crazy to say, but that it would be a bearish formation and a bearish pattern that could definitely bring some downside if they report bad earnings or the numbers are not there. Continuation growth within those earnings. So they do report Wednesday, August 28th. So NVIDIA could also just be consolidating until that earnings come out. So you could tell here, right? Back here when we broke above 97, we gapped up. You filled that gap finally, and you pushed all the way up to 120. 120, you hovered there, resistance, and then you ultimately created all-time highs there. Found again some resistance there, and worked in that range between 132 and 120. Held support for a while, and you were just trading between that range until ultimately you did lose 120 and you came back down here. So now it's creating a range, in my opinion, between 120 and 97. So you could be forming here or consolidating here until earnings between that 120 range and that 97. For the most part, from what I've noticed when it comes to earnings, there usually tends to be a gap to fill to the upside or to the upside. So we do have a gap to fill around that to the upside around 121, 122 and change, and you do have a gap to fill around 86. So in my opinion, you could just be hovering in the middle here between that 1010, maybe 115 all the way down to 97 until earnings, because I do think the percentage expected move is going to be pretty high, which could take it up to that gap fill to the upside or the gap fill to the downside. If you do manage to find some volume to the downside and reject before then the next level you want to lose to the downside would be 97 to 4. Below that, then you have 91, or the 200 EMA would be at 88. You do have a gap to fill around 86, 87 and change. The 200 SMA is at 82, and like I said, you have that huge gap to fill, but in my opinion that won't be filled unless earnings is bad and they don't meet expectations. To the upside, if it does move before earnings here, the next level I'd be looking at would be to retrace the 21 EMA, between the 21 EMA and the 50 EMA between 111 and 113. To get bullish again, in my opinion, you need to reclaim 120.88 on NVDA, where it's having a hard time. The last time it tried to, 2 times over here, it failed and made lower lows. So if you're able to break above 128, then you'd be looking at these moving at, the retest of 132.66 and then an all-time high attempt at a new target there at 144.71. So if we go over to the weekly, you did retrace. You get a little bit bullish here because you did manage to close above the 21 EMA. So we'll see if it manages to hold above it. Like I said, you could have an attempt there towards that 113 given confluence, and if you fell there, then you could come back down within our range. The HSI on the weekly, what's interesting here is that it is in oversold conditions, so you could generate an HSI arrow like you did back over here and continue to make higher highs. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin, currently its price target is at 59K. Nothing has really much changed since I've said in previous videos. We're still, it got bullish back to 70K, and ultimately came down and is finding now resistance at that target. And you did drop all the way down to 49K, managed to hold above the 200 EMA SMA, but now failing it again. So what can we expect here? So these patterns are kind of invalidated after, not invalidated I should say, but within the dirty bar rule there, within this bat pattern that's past its trajectory there. So we could be looking at the 2-day where there is a dragon pattern as well as the 3-day. So I'm looking at the dragon pattern on the 3-day here to see whether there's going to be more upside or downside. And if we're looking at the 3-day pattern, you can see that it's losing the 50 EMA, and it did come down to CD at 1.272 of the dragon pattern at 52.3K. So if it does not find support here at these levels, that's where I'd be looking at. Below that, you have the 200 EMA there around 46.5K, the 200 SMA around 40K, and then PT1 at target 38.5K. So in my opinion here, there is a bearish case scenario, guys, where if this doesn't start to find support here and volume to the upside, I have a target down to that PT1 there around 38.5K. If you're able to hold above the 50 SMA here around 64, 65K and ultimately break out of that 69, 70K range, then you'd be looking at upside targets and new all-time highs. You have the 71.8K, and then OPR would be new all-time highs at 78K, 78.4K. If we look at the weekly, you did come back to test the 50 SMA, did find support above it, but still finding resistance at the 9. Obviously volume picked up here, but you still, in my opinion, it's clear indecision. Yeah, this candle will be closing in about, I believe, 1 hour or 1 day, I should say. So we're going to see if there's going to be more upside or more downside here, or consolidation. I do think the potential opportunity there with the spot Ethereum ETF that's coming in for BlackRock and Vanguard. I've been hearing some news about that. So if that is the case that comes out, then maybe you see some upside. It gets bullish again. Otherwise, this, in my opinion, with these institutions coming in here with these ETFs, the price is a little bit more controlled. So we'll see what happens here for Bitcoin. So definitely keep an eye out on crypto, because if we do have some downside action here, it can get pretty nasty to the downside, at least at 38K, in which case if that doesn't hold, then we do have targets back down to test all the way down to the 25 to 30K range. The weekly puts the 200 EMA around 35K, which gives confluence again to that 3-day pattern around there if we do get volume to pick to the downside. So definitely keep a close eye on Bitcoin. So having said that, guys, that's all I have for you. I will be streaming tomorrow, same time as always. So if you're interested in watching me stream, I do stream over on Twitch from market open to market close, Monday through Friday. So if you want to check it out, link to my Twitch in the description box below. So having said that, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.